Hello, everybody, and welcome to The Bottom Line here on TVP World, where we bring you the best of the main business and economic stories of the day. I'm your host, Don Arleth, in for Marie Cato. New taxes are in the pipeline, as earlier forecasts were too optimistic for budget revenues in 2026 and beyond. Today, the VIG's banking index took a hit to the tune of 8% in early hours trading on the Warsaw Stock Exchange. The reason? A hike in corporate income tax for banks in 2026, going from the current 19% all the way to 30% next year. And there are still more taxes to come. Jan Kennedy breaks it down in this report.
Warsaw Stock Exchange investors with banks in their portfolios sold off heavily on Friday. As a result, the WIG Banki Index, which includes Poland's biggest lenders, plunged, and by 4 p.m. it was down by more than 9%. It comes after the Deputy Finance Minister announced a new tax on the banking sector will be introduced starting next year.
The rate will rise from 19% to 30% in 2026. In 2027, it will be 26%. In the following years, it will be 23%.
This is set to bring in an additional €1.5 billion in 2026 and some €4.5 billion within the next decade.
The Ministry of Finance is looking for additional sources of revenue, ideally ones that can be explained simply to the public. For now, the burden has fallen partly on banks. I have mixed feelings about this approach, since it represents a departure from established tax policy. Suddenly, one type of business entity is faced with a clearly higher income tax rate than others.
Other sources of revenue under consideration include a 15% hike in alcohol excise next year and a further 10% in 2027. Increases to the sugar tax, introduction of a packaging tax, budget cuts of up to 20% in some ministries in 2026, and a 3% digital tax on big tech companies. These measures are seen as an effort to offset Poland's rising expenditures, particularly in defence. While this level of spending was anticipated, revenue inflows have so far fallen short.
The Ministry of Finance was way too much optimistic in their forecasts. So they forecasted higher inflation. They also forecasted quite a strong consumption growth. 20 billion zlotys are now sure to be missing. It is even possible that we see 30 billion zlotys missing at the end of this year.
And Poland's budget deficit in 2025 is growing at a faster pace than in previous years. According to mBank research, in the first 7 months, the shortfall reached nearly €37 billion, which they say leaves only 30 billion of fiscal space until the end of the year. Analysts say this means the Ministry of Finance will likely have to revise the budget in the autumn.
Without revision of the Budget Act, we would need to keep deficit at levels seen last year. However, this is not really the most probable scenario. Of course, every year spending accelerates at the end of the year.
The Ministry of Finance, however, is of a different opinion. It told the Polish press agency on Friday that it is not working on a 2025 budget revision. For TVP World, Jan Kennedy.
When you need quick money in a bind, most people go to the banks. The government is no different. But there are other taxes as well to look forward to. Of course, I would like to remind our viewers that Poland is modernizing its armed forces and spending the highest proportion of GDP on defense in the entire NATO alliance. So how will this affect us and our bottom line? Joining me now to discuss is Witold Orłowski, economist at Vistula University. Witold, hello, and thank you so much for joining us on the bottom line.
Welcome.
Yes, now, starting off here, the Ministry of Finance has said that it is not working on or considering taxing mandatory reserves of commercial banks. So why did they choose not to do this and instead increase the corporate income tax for banks?
Well, that's a technicality in a sense. I mean, government is trying to tax the banks in a way that is the least likely to influence the price of services of the banks and so on and so on. So basically, the idea is that they are setting the taxation that will just tax the profits of the banks rather than being shifted to the customers. That's an illusion, by the way, because the banks all over the world have shown many times that they are capable of shifting the cost of new taxes to the customer rather than pay them out of the profits. So it's a technicality doing it this way or another. Clearly, the issue is that the government is short of money and the profits of the banking sector are record high. And the Minister of Finance wants to tax them. And is he going to tax really the profits or just tax the customers of the banks? It's subject to discussion. I mean, the minister would claim that he will just tax the banks. I'm absolutely sure that by the end of the day, it will be the customers that will pay this price.
Right. Now, what about the legality, or if not the legality, but the fairness? I mean, the banking sector is being targeted. I mean, going from 19% to 30% in the span of less than a year. I mean, is this fair to the banking sector?
Well, yes and no. I mean, the banking sector, the government is using the term of windfall tax on that, because that means huge taxes that are not really due to the increased activity, economic activity, or just due to the conditions. It's normally happening with the, energy companies, where the oil prices are growing and so on and so on. So depending on their activity, their profits are growing. In the case of the banks, I would say that's a certain exaggeration, because the profits, the banks make their profits. The point is, however, that the banks claim, and they are right, that because of various things happening in the economy, they've got to carry various burdens, financial burdens. For example, the cost of solving the issue of the Swiss franc denominated credits and so on and so on. And they say we are already heavily taxed. On the other hand, the government is looking at the fact that despite of all these burdens, the profits of the banks are increasing every year rather than falling. So the point of the government, the Minister of Finance, is okay. So you shift so you really do not pay these taxes. You've got beautiful profits. That majority of them goes abroad because, well, maybe not the majority, but a big share of them goes abroad to the foreign owners of the banks. And if you've got such high profits, then you should share them with us. This is partly kind of a manual steering, right? I mean, you see a certain business making big profits and you increase the tax rate because you say, there is something wrong with those profits. You shouldn't have some big profits.
Or you need money, and you know where the money is, who has the money. So let's just go to the banks.
That's a cynical explanation of the story, well, most likely the true one. I mean, the government is searching for the money, and actually the banks seem to be the easiest target to be reached. As I said, the point is only, will they really tax the banks or the customers of the banks that normally pay those? I mean, at least until recently, they were paying those increased profits by higher payments for the bank services, lower interest on deposits, higher margins on loans.
Yes. Yeah, exactly. Well, okay, let's look at the broader sector. Now, could these tax changes, could they lead to consolidation in the banking sector with smaller banks struggling to absorb the impact?
Well, we've got basically a very healthy banking sector, highly profitable and well capitalized. So I do not think that the profits will... Well, I rather tend to believe that the banks as usually, will be able to shift those taxes to their customers. That means, in fact, the minister will tax the kind of millions of customers of the banks rather than the banks themselves. So I do not think that it will have a profound effect on the sector itself. Although obviously dealing with that it's always a problem. It may in the long run lead to a lower increase of savings in Poland, because if the banks are making saving less profitable because they must transfer the tax to the customers, and loans more costly, that by the end of the day may lead to a slower growth. So there's a price to be paid for that.
Surely.
But not in the sense of the banks having problems. The issue is deeper. You started your comment. I mean, your colleague started the comments with the situation of the budget, and actually he raised the issue of the increase of spending on the defense, although on the health. So all these expenditures that after the COVID, after the war, we see that must have been increased, and that's nobody is criticizing that. The point is that at the same time, the previous government has already increased significantly, the social spending of the government. And now it was already the last year of Prime Minister Morawiecki rule that the issue started to appear that if you must increase some spending, defense and so on, and you do not do anything, I mean, you don't touch the social spending at the same time, then obviously your overall spending are increasing. You do not touch taxes at the same time, so basically the result is a growing deficit. And this is not the result only of the war-related and COVID-related and health-related expenditures. This is all the result of the fact that the governments in Poland are afraid of doing anything, of touching the other expenditures or taxes to secure either the funds to finance the increased defense and health expenditures. And as a result, we've got the growing deficit that we've seen on the graph before.
Right.
The Prime Minister Morawiecki was very skillful in hiding this deficit. He was using all these statistical tricks the creative accounting, budgetary accounting to hide this process. This government is more open in this, and because of that, the deficit is growing faster. But the process, the reason is basically the same that Prime Minister Morawiecki was facing, as his government was facing.
Okay, well, we also have some bills coming due from the COVID-19 pandemic as well. So, but let's move on beyond the political aspects of this, and let's move on to the other taxes that we're expecting here. And it is Friday. It's good for everyone to know that excise duty on alcoholic beverages next year is going to increase by 15% compared to 2025 rates. From 27, they are going to have a further 10% increase. So how much is this impact on consumer behavior and getting people to make healthy choices, or how much is this just simply grabbing for cash in places where the Ministry of Finance can get it?
Well, in a sense, both. Every minister of finance raising tax on alcohol would say that he's doing all tax, and tobacco would say that this is and sugar would be basically this is to make the consumer make wiser choices about the use of alcohol or unhealthy food. But the bottom line is that the minister is searching for the money. And obviously, given various taxes he can increase, I would agree that basically taxation of the unhealthy food or drinks is a better way of doing it than any other, given that really the alcohol in Poland is relatively cheap tobacco in Poland is relatively cheap compared to the other European countries, and I would say poor people who smoke, but they should quit. They should quit this bad habit.
Well, they're certainly encouraging them to, because
it is the easiest decision, because here the minister at least has got some good explanation, although I do not believe that this is the main reason behind this big increase.
All right, well, let's talk about the budget negotiations for 2026. Some ministries or budget positions within them might face a 20% budget cuts. Of course, every ministry now is competing for funds, so this is tightly under wraps. Where do you think that we will see the most drastic cuts?
Well, I'm afraid we don't know, basically, but I'm afraid that it's not going to be a healthy procedure, because the biggest cuts you will see in the current expenditures, in the investment expenditures, rather than touching the welfare state expenditures. That is the biggest chunk of the expenditures. I mean, half of the expenditures of the Polish state is the welfare state. Trying to balance the budget, to reduce the imbalance that appeared due to the increase of some of the expenditures that we already talked about. It can be hardly done by cutting the current expenditures of the ministers without touching the biggest chunk, means the social security type of the expenditures. And as I said, I mean, the government doesn't seem ready to do it. So instead of that, trying to force the ministries to spend less on various kind of daily expenditures, that's always bringing some effect, obviously, but the problem is to what extent it's happening at the expense of the quality of functioning of the state institutions. I obviously agree with everybody telling that there's a lot of the misuse of the money in the state. That's true, but normally just cutting the expenditures by 20% doesn't mean that the expenditures will be wiser. It may mean that the easiest parts of the expenditures to be cut will be cut,
right.
Namely the investment.
How much of this is connected with the European Union and how it will respond if Poland fails to reduce its deficit with the effective deficit procedure? And very briefly, we're almost out of time.
The majority of the EU countries is under the excessive deficit procedure. France has got a deficit as big as Poland, and in relation of GDP to GDP, are close to the Polish one, and basically, the European Commission and the European Union is not doesn't want really to force the countries to make anything rapidly, doesn't have the power really. Basically, the excessive deficit procedure is obviously important, but this is rather, at least for a couple of years, is rather discussion about what the government wants to do, rather than imposing any sanctions and any penalties on the government. Theoretically, a country with an excessive deficit can face some penalties, financial penalties, but never in history it happened. So, some countries like Hungary had this excessive deficit procedure, I guess, for 10 years without any real punishment, with obviously unpleasant discussions with the EU Commission, but that's it.
So this is more of a self-check.
This is self-check.
Okay. All right. Well, Witold Orłowski, economist for Vysla University, thank you so much for this discussion. Appreciate it.
Bye.
And that concludes this edition of The Bottom Line for today. I was your host, Don Arleth. We bring you the best of the regional business from Monday to Friday at 5:10 CET on TVP World. In the meantime, for the latest in regional business, follow us on X and go to tvpworld.com. That's it for me for now. Thank you for joining us, and we'll see you next time. Goodbye.